Hello, once again. My name is Timmy. Had over 20 years of experience in both investment banking and also financial services. And today I'll be talking to you about the differences and the similarities between money market mutual funds and savings bond. On this channel, we talk about personal finance, we talk about self-development, we talk about retirement planning, we talk about wealth creation and management. We talk about investing. If this resonates with what you want, please kindly click the subscribe button, subscribe to our channel. We thank you for everyone that keeps on returning to watch this channel. Please click the notification bell and also click the like button for this video to go to as many people as possible. So right away, we go into the video of today, and in which we talk about the similarities between money market mutual funds and the federal government savings bond. We'll talk about the minimum balances, we'll talk about the duration, we'll talk about the interest payment, we'll talk about the risk, we'll talk about the how to assess them, we'll talk about the availability, and we'll also talk about their interest. Then money market mutual funds. Money market mutual fund is actually like a pool of funds in which we have active managers that manages these funds, trading the funds that have gone into, because this fund is actually a pool of funds in which Uche comes drop 2 million, Tower comes drops 1 million, which Stacy comes drops her own maybe 500k, this person comes drops her own 5,000 naira, this person comes drops her own 10,000 naira. The fund takes all these funds, money market mutual funds, the manager takes all these funds and invest it. They invest in treasury bills, they invest in commercial papers, they invest in bonds, they invest in equities, and at the end of the day, when the interest comes, this money market mutual fund generates interest every day, and we'll come to that. Also, what are federal government savings bonds? Federal government bonds are actually debt securities issued by the federal government to the public, saying that they want to borrow money from the public, and the public also gives the government their funds, and the government uses these funds to do public amenities, uses to create road networks, hospitals, and all that. So, and this funds, the capital and interest are paid at a specific duration, in which we're also going to talk about. So, what are the minimum balances for both this money market mutual funds and the federal government savings bond? So for the money market mutual funds, the minimum balance is 5,000 naira for you to invest in it. It's 5,000 naira. And also for the federal government savings bond, the minimum that you can use to start is also 5,000 naira. So, and what is the duration? The duration for the money market mutual fund is forever. Like, once you have put in your funds there, it keeps yielding the interest upon interest upon interest. It doesn't have a specific until you say, okay, I don't want to do it again. But for the federal government savings bond, the duration is usually 2 years or 3 years. And there are also another, concerning the bond in Nigeria, we have two types. We have the federal government savings bond, and we also have the federal government bond. The federal government bond has minimum of 20 million naira, but the federal government savings bond has minimum of 5,000, and that is what we are talking about here. That one is usually, the duration is usually between 2 to 3 years. So when we talk about the interest payment for money market mutual funds is usually daily, and the fun of it is that they pay your interest daily, and the interest plus the capital is rolled over, and it yields another interest plus capital. What comes to that is very sweet, And the federal government savings bond, the interest is paid quarterly. We call the interest coupon, and it's paid quarterly till the maturity. So if you are invested in a federal government savings bond that is 2 years, so that means your interest is paid 4 times within a year, and at the end of the second year, your capital is paid back. You must have collected your interest over the years. And what are the risks involved in these two investments? Both of them are both low risk investment. So for the money market mutual fund, it's also low risk. The federal government savings bond is also low risk. Where can you assess this? We can assess the money market mutual fund. You can assess it through maybe IBTC, all the assets managers. How do you assess these funds? How do you assess this investment? You can assess it through your asset managers. You can assess it through the asset investment managers, the investment managers. You can assess it through stock brokers. You can assess, we have some of the asset managers, some of them are IBTC, FGN Quest, ARM, so many of them like that. You can also access them through the investment brokers, the apps of the investment brokers. All these things have been simplified. Gone are the days in which you have to go to the stockbroker's office to go and fill form, to go and do this, put your passport, fill your form, drop your IDs and all that for you to be able to access all this. But this has also all these things now have been simplified for you through your phone, through your gadget. You can access all these investments. So, what are the availability? Now, money market mutual funds is available daily, like daily. But for the federal government savings bond, is available every first week of the month of a new month. The first week of the new month is you can access it. So, how is the interest paid for the money market mutual fund? Just like I've explained before, your interest is compounded daily. You enjoy compound interest on this because if you put in maybe 50,000 in your money market mutual funds today, by tomorrow it has yielded interest, and that interest is now added to your capital and is now rolled over. The interest for that plus that capital yields another interest. The interest for that capital yields another interest, and it goes on like that. And that's why it enjoys compound interest. It enjoys compound interest. Just like you're seeing on your screen, if you put in 50,000 for like 18 years, you're putting in 50,000 every month for like 18 years. At the end of that 18 years, you're going to be having over 100 million naira doing just putting in 50,000. Just putting in 50,000. And for federal government bonds, for federal government savings bond, the interest is paid quarterly. So there's no compounding or anything. Your interest is paid quarterly, and at the end of the duration, whether it's 2 years, whether it's 3 years, or whether you have gone for the one of 20 years, your capital is paid back. That's it. So there's no compounding in that and all that. So for if you invest like 10 million naira, okay, let's just go and do some calculations now. If you invest 10 million naira for 5 years at 20% interest rate, money market mutual funds, if you invest 10 million naira at 20% interest rate for 5 years, your interest at the end of that 5 years will be like over 17 million naira. But if you invest that same 10 million in federal government savings bond at 20% interest rate for 5 years, you will just be it's 2 million every year. And at the end of the fifth year, you are on 10 million naira. So at the end of the fifth year, federal government savings bond, your principal plus your capital plus your interest is going to be like 20 million. But that same 10 million naira invested in money market mutual fund, your principal plus your interest will be around 27 million ish. So these are just the differences, and these are just the similarities between the federal government savings bond and the money market mutual fund. You can now weigh it. You can now use it to determine, okay, with your goal, with your financial goal that you have, which one of these do you want? Do you want cash flow? Because if you want cash flow that you want money to be paid to you every quarter, then you go for federal government savings bond. But if you want if you want an investment that you want it to compound with time, like you want your money to just be rolling over, that okay, you want to use it for your retirement income, like you want to use it for your retirement, that you want to have a personal retirement account, then you can go for maybe money market mutual fund. But if you want consistent cash flow, you can go for savings bond. So it now depends on your goal. What do you want? Is it that you want the cash flow, or is it that you want your money to just compound over time? Thank you for sticking around in this video. See you in the next video. Thank you very much.